Right now, as we look at the live market data on this Wednesday morning, November 26, 2025, Ondas Holdings Inc., ticker symbol ONDS, is trading at exactly $7.84 per share. The stock is currently experiencing significant intraday pressure, down approximately 7.10% from the opening bell, with the price action sliding from an early high of $8.68 down to the current levels. We are seeing a heavy volume session, with over 42 million shares already changing hands, significantly outpacing its typical average, indicating a massive battle between profit-taking bears and the bulls who have ridden this equity up from the depths of penny stock territory earlier this year. The market movement today is volatile, characterized by sharp red candles on the 5-minute chart, as the stock attempts to find support near the $7.75 level after failing to hold the $8.50 line in the pre-market session. The expectation for a company like Ondas Holdings, historically viewed as a speculative, cash-burning microcap in the niche drone sector, is that it should be trading on thin volume, largely ignored by the broader market and struggling to keep the lights on. Investors generally expect these types of drone-in-a-box companies to issue endless press releases with very little substantive revenue to back them up, often leading to a slow bleed in share price until a reverse split occurs. That is the expectation: a struggling tech experimentalist trapped in the valley of death between prototype and production. The reality, however, forces you to completely abandon that outdated narrative. The reality we are witnessing today is a company that has effectively transformed into a defense and critical infrastructure heavyweight almost overnight, evidenced by the fact that it is no longer a sub-dollar stock, but is trading near $8 with a market capitalization that has ballooned into the billions. This disconnect between the struggling startup memory that many traders still hold and the defense contractor reality currently unfolding is creating one of the most aggressive repricing events we have seen in the small-cap industrial technology sector this year. While the crowd on social media might still be dismissing this as a meme stock run, the institutional flows tell a story of a fundamental shift in how Wall Street values autonomous systems in an increasingly geopolitical world. When you examine the chart, you might assume the 7% drop today is a sign of weakness or a pump-and-dump collapse, but you have to zoom out to understand the context. This stock was trading at $0.57 just a year ago. The reality is that today's pullback is a technical cooling-off period following the announcement yesterday of the definitive agreement to acquire Roboteam, a global developer of tactical ground robots. The market is digesting the implications of this acquisition, balancing the long-term revenue synergy against the immediate execution risk. Most retail investors, using a standard individual brokerage account, might see the red percentage today and panic. But sophisticated traders recognize this as a liquidity event where early entrants are rotating capital while new institutional money begins to accumulate shares at these elevated levels. The volume profile suggests that, while the price is dipping, the buying interest at the $7.70 mark is robust, creating a potential floor. This is not a company fading into obscurity, it is a company experiencing the violent growing pains of ascending to a new tier of market relevance. Let's analyze the specific catalyst driving this week's action. The acquisition of Roboteam is not just another bolt-on deal. It fundamentally alters the company's operational scope. By adding tactical unmanned ground vehicles, UGVs, to its existing portfolio of aerial drones, Ondas is moving from being a drone company to a multi-domain autonomy provider. This is exactly the kind of vertical integration that gets the attention of Defense Department allocators who prefer single-source vendors for air and ground intelligence. The Roboteam deal is expected to add between $30 million and $40 million in revenue in 2026, which is a massive injection for a company that just reported record Q3 revenues of $10.1 million. When you combine this with the recent Sentry CS acquisition, you begin to see a clear strategy. Ondas is building a conglomerate of autonomous defense systems. This is why we are seeing such intense volume today. The market is trying to calculate the new forward-looking earnings multiple for a company that suddenly has three distinct revenue engines: Ondas Networks for rail, Ondas Autonomous Systems for air, and now Roboteam for ground operations. It is important to discuss how this stock is being traded across different platforms because the shareholder base is shifting. In the past, ONDS was primarily a playground for high-risk speculators on platforms like Robinhood, where users would chase the volatility of penny stocks without much regard for the underlying business. We are still seeing significant activity from the Robinhood stock trading crowd, particularly in the options market where implied volatility is spiking above 160%. However, we are now seeing a different class of investor enter the fray. Data indicates that accounts associated with Fidelity Investments and Interactive Brokers are beginning to show accumulation patterns. These are typically longer-term holders who are less concerned with intraday swings and more focused on the multi-year thesis of automated defense infrastructure. When you see Fidelity mutual funds or Fidelity ETFs starting to pick up shares in a former microcap, it serves as a validation stamp that the company has cleared a certain threshold of investability. This transition from a purely retail-driven stock to a mixed retail-institutional ownership structure often creates the exact type of volatility we are seeing today, as the fast money exits and the slow money enters. The core business model of Ondas Holdings is complex, and understanding it is critical to determining if the stock is a buy at $7.84 or if it is destined to fall back. It operates in two primary segments that are often misunderstood by the casual observer. First, there is Ondas Networks. This division focuses on private wireless data networks for mission-critical industrial markets, primarily railroads. Think of this as the rails on which data travels. They use a proprietary software-defined radio technology that allows massive amounts of data to be transmitted securely over wide areas. This is not the sexy part of the business, but it is the stable, recurring revenue engine. The contracts here are with major Class 1 railroads, and while the sales cycle is excruciatingly long, once the technology is installed, it is incredibly sticky. You don't rip out a wireless network that controls train movements overnight. The expectation here has always been slow growth, but the reality is that the modernization of rail infrastructure is becoming a federal priority, providing a tailwind that many analysts are underestimating. The second and more explosive part of the business is Ondas Autonomous Systems, OAS. This is where the Tesla stock comparisons often come into play. Not because they make cars, but because they are attempting to automate a physical task that was previously manual. Just as Tesla removed the driver from the equation, OAS is removing the pilot. Their flagship technology is the Optimus system, a drone-in-a-box solution that can launch, fly a mission, land, and recharge completely automatically. This is crucial for industries like oil and gas, security, and agriculture, where paying a human pilot to fly a drone every day is economically unfeasible. However, the real driver of the recent stock surge is the Iron Drone Raider system. This is a counter-UAS platform designed to intercept and disable hostile drones. With the proliferation of drone warfare globally, the demand for hard-kill counter-drone systems has skyrocketed. The recent $14.4 million in orders for these systems from military customers is the tangible proof that their technology works in the field, not just in a PowerPoint presentation. This shift from commercial inspection drones to active military defense systems is the primary reason the stock has appreciated so dramatically. We must also address the financial elephant in the room. In October 2025, the company completed a massive capital raise, securing over $400 million. This was a pivotal moment. Prior to this, the bear case for Ondas NDS was always, they will run out of cash. That argument is now dead. With hundreds of millions on the balance sheet, they have the war chest to acquire companies like Roboteam and weather any short-term cash burn. However, this raises a new concern: valuation and capital efficiency. The stock is currently trading at a price-to-sales multiple that is significantly higher than its industry peers. When you look at tools like Schwab Intelligent Portfolios or other automated analysis platforms, they will likely flag Ondas NDS as overvalued based on traditional metrics. The PS ratio is stretching toward 30x, which is a premium usually reserved for high-growth software companies, not hardware-intensive industrial firms. This valuation premium is the market pricing in perfect execution. If Ondas stumbles, if the integration of Roboteam is clunky, or if the rail contracts get delayed again, the stock has a long way to fall. The tension here is between the massive cash position, which provides a safety net, and the sky-high expectations baked into the $7.84 price. Let's pause for a moment and consider your own position in this volatility. Comment below how many shares of Ondas Holdings you currently hold and what your average entry price is. Are you one